Yes guys, welcome back to episode 7 of a day trading bootcamp, Zero to Hero. In this episode, we are basically going to be tying together everything that we've been over the last few episodes, and we're going to be covering displacement and break of structure, which go hand in hand, as you'll see. So what is displacement? Displacement is basically large moves in the market. So we can see this is actually a trade that we're currently in right now on USD JPY. You can see a displacement is large moves in the market. You can see we had big move here in the market that gave us displacement to the upside, which is obviously the way that we are looking to trade today, hence why we took this trade. So displacement is large moves in the market, okay? So what do we mean by displacement? We essentially mean strong, fast directional moves, okay? That is essentially what displacement is. And obviously when we are looking for break of structures in the market, we want strong directional, the bias is clear. Once we have that break of structure, it's not just price takes 2 hours to get that break of structure. We have a directional move. You can see on this example here, we were looking for this break of structure here or a market structure shift. And we had a very, very impulsive move up, which broke structure. And then obviously we came down and entered, but obviously we won't get too much into that. So we're also going to cover on what is a market structure shift. So displacement is strong directional moves in the direction you are looking to trade. Okay, so coming into the day today, we were looking for buys. So we have waited patiently. This morning, you can see on the sessions indicator, London opened all the way up here. And we were waiting patiently for price to displace to the upside, breaking structure to the upside. So that gave us confidence that the market is no longer in this downwards move. And it is now displacing to the upside, which is what we want to see, okay? So that is what displacement is. It's very, very simple. It is just big directional moves in the way that you are looking to trade, okay? So, and it's normally London or New York driven, okay? Asia, as we said in the previous episode, is normally just consolidates and there's not a whole lot of liquidity involved in it. Whereas London and New York have a lot of displacement moves. I mean, you can see here we had a big displacement move to the downside, but then we countered that with a displacement move to the upside. Okay, so there is displacement happening in the market all the time. We can see big displacement move to the upside, big displacement move to the downside, big displacement move to the upside. I think that was news, however. And then you can see not so much displacement. You can see we have a downwards move here, but it's quite unsure, if that makes sense. Like you can see that we're sort of in a diagonal move rather than a big upwards move. That is displacement, okay? So very, very simple. We don't really need to touch more into displacement. But now the more important thing is a market structure shift and a break of structure, which we touched on in the market structure episode. However, I want to dive a little bit deeper because it is essential that you know what this is for my strategy. So obviously we know what uptrends are. We know what downtrends are. So if we're in a downtrend here, I want you to tell me if that is a break of structure to the upside. 3, 2, 1. No, that is not a break of structure to the upside because this low here, this high here, sorry, did not create a lower low. Okay, so that is not a valid high in the market. The next valid high in the market would be this high here. So that would be a market structure shift. Okay, and then with break of structures, as I said in the market structure shift, in the market structure episode, break of structures are when we are continuing the trend. So we can see we're in a downtrend here. So a break of structure here, break of structure to the downside because we are continuing that trend, okay? Another break of structure here because we're in a downtrend and we are continuing that trend to the downside by breaking that structure point, okay? And then a market structure shift is when we are shifting into a different market structure. Okay, so we can see that we were in a downtrend. However, we have now closed above the last recent high of that downtrend that printed a low afterwards. So that is now a valid high in the market. We have now closed above that, meaning that we have shifted the structure from a downtrend to an uptrend. This is a perfect example over here. We can see that on the lower time frames, we were in an ultimately we were in a downtrend, okay? We were creating lower lows, lower highs, lower lows, lower highs, lower lows, and then we created a higher high. Okay, so that was our last valid market structure shift point because this low here got taken out and closed below here. Okay, so this was then a low after this high, so this high was then valid. And once we had this candle closure above that, we then had the confirmation for buys, okay? And then we can tie in the fib and the tap into the fib, and then in later episodes we'll come into the entry confirmations. So it really is as simple as that. We'll do a little upwards, we'll do an upwards example, an uptrend, break of structure, market structure shift, etc. Let's delete all of this. So uptrend, we can see, is this a break of structure? I'll give you 3 seconds. Okay, I'm going to give you a few examples now. Is this a break of structure with this low here? 3, 2, 1. No. Why? Because, as I was mentioning, this low here did not then print a higher high. So this wasn't the last low in the uptrend. The last low in the uptrend was here, as it then printed a higher high afterwards, okay? So that is essentially why that is the last low, valid low in the market, okay? So if we had a close below this low here, that is now a market structure shift, okay? So we can see this low has been closed below, so we will mark that as a market structure shift. The market has now shifted from an uptrend, creating higher lows, higher highs, higher lows, higher highs, to now creating a lower low. So we have now shifted to a downtrend, and we can look to do something like this and look to enter something like this, where price then comes from here into the fib. We look for our entry confirmation, which obviously we'll touch on in later episodes, and we look to continue that trend from there, okay? It really is so simple. So you're essentially looking for swing lows and swing highs in the market to mark out your highs and lows, because we can see here on this example, this is all just noise. We're not going to go right low, high, low, high, low, high, low, high, low, high. That's just noise, okay? We want to escape all of that. We want to be looking for prominent swing lows and swing highs in the market. So this is the first swing low. This is the first swing high. Second swing low. Second swing high. Third swing low. Third swing high. Fourth swing low. Fourth swing high. Fifth swing low. Fifth swing high, etc. Okay, so we want to be looking essentially for these. Let's find the pencil or highlighter. You can see they are swings, okay? They're not just noise, because we could be going, right, that's a swing, that's a swing, that's a swing, that's a swing, that's a swing. You know, we could be going through all of that, and that's not necessary. We don't need to be looking for all of those. We want to be looking for prominent highs in the market, okay, and then marking those out and looking for market structure shifts, break of structures from that, okay? It really is as simple as that. So hopefully that makes a lot of sense, and you guys are starting to grasp everything that I'm teaching you now. It's actually really good that we've had this entry today, and it's running nicely right now, as we can see, because this is literally exactly what I want to be teaching you. You can see that we were in a downtrend, okay? Let's remove all of this. We were in a downtrend, and then we identified the last swing high that then followed with a swing low. So that was the last valid high in the market. A lot of people will class this as a break of structure. That is not valid. You know, people class break of structures and market structure shifts as different things. That is not a break of structure or a market structure shift. This is a market structure shift, because this is a swing high in the market, a valid swing high in the market, which is important. And we have closed above that, so that gave us directional bias for the day, which was buys, going through the higher time frames, which obviously I've taught you. So the 4 hour and the 1 hour were aligning bullish today, so we came into the markets looking for buys, and it's so simple. Whether this trade hits TP or stop loss, it doesn't matter as well, because we know that this is the strategy, and long term this strategy is profitable. So one trade makes no difference. That's a little bit of psychological talk to go through there as well. But psychology is a whole new video, and a very long-winded video, which we will need to cover as well. But that is essentially all I wanted to cover today. Pretty simple episode, but so important that you find and identify the correct market structure shift points, okay? I can't express that enough, because I used to make that mistake before and class any high as a break of structure or a market structure shift, and that is simply not the case. And I know that through years and years of backtest and years of live trading, I know that that is not the case. And I know that these proper market structure shift points and proper areas in the market that you are looking to break are much stronger for your bias. Okay. So that is everything that I wanted to touch on today. Hopefully that clears everything up if you had any questions. And I will see you in the next episode.